Welcome to the little thing that matters. And today we will be talking about the FD interest. What you see is not what you get. So you must be thinking, what does it mean and why we are creating this video? So we are creating this video to actually break the myth that people have about FD. So most of the people thinks or believes that when the bank says that you are going to get certain percent on the FD like 7%, you are going to get that 7% interest. But that's not the truth because you are supposed to pay taxes and cess on that, and that is going to decrease your interest earned from so that is not going to be the same as what you were expecting. And of course there is inflation as well that actually eats up the value of your money, but still people thinks that FD is safe and FD is where the money grows. Not for everyone, that's not the reality. So now let's see the FD tax rule. As we already talked, taxable FD interest is fully taxable. So the FD interest that you are earning, you are supposed to pay taxes based on your tax slabs. Like if you are in 10% tax slab, then you are supposed to pay 10% tax on it. If you are in 20 or 30, so you are supposed to pay respective amount based on your tax slab. And on addition to the tax slab that you are going to pay taxes for, there is health and education cess that is also there, that is going to increase your tax liability on your interest a bit more, that you are supposed to think as well. So now let's see what you are expecting from the FD. So this is the expected FD return that you think or you see when you are actually investing in the FD. So the investment say is of 1 lakh rupees, and then FD interest rate is 7%. And so your expectation is you are going to get 7,000 rupees per year. That looks nice, but that's not the case because you are supposed to pay taxes and cess on that. So your actual interest rate will not be the same. So let's now see the actual interest that you are going to get. Now you can see this is table. Data is put for the expected versus actual return in terms of amount as well as in terms of percentage. Now let's talk about the 10% tax slab rate. Okay, so people who fall in 10% tax slab rate, they are supposed to pay 10.4% tax including cess. Okay, and they were expecting the return to be 7,000. Now the tax that they are supposed to pay on this return, expected return, is 728. So this actually makes the actual return as 6,272 because they are supposed to pay 728 rupees tax. So that will be deducted from the expected return. So that decreases your actual return from the expected return that was 7% by 0.73%. So meaning you are actually getting 6.27% per day, not 7%. For 20% tax slab rate people, they are supposed to pay 20.8% tax plus cess, and they are eventually going to get 5,544 rupees, not 7,000. And this is going to decrease the percent that they are actually going to get by 1.46%, meaning they are actually going to get 5.54% only, not 7% that they expected. For 30% tax slab rate, they are going to pay 31.2% of tax, and this drastically decreases the actual return to 4,816. That is 2.18% less than the expected return, meaning you are only getting 4.82%. That's really less. So, meaning the higher income you have, the lower interest you are going to get because of the taxes. So, we talked about the taxes, but we haven't touched inflation yet. So, inflation is money loses its purchasing power every year, and the price of everything increases every year. So, any return that is below the inflation is actually loss. It means your money is losing the purchasing power. And considering average inflation in India is 6%, let's see the FD returns versus inflation. So if you can see here, for the 10% tax slab rate people, actual FD return was 6.27 after taxes. So they are actually kind of in gain of 0.27%. For 20% tax slab rate, the actual FD return was 5.54, and the uh, inflation is 6%. So they are actually in loss of 0.46%. So actually their money is not growing, rather it's depreciating. For 30% it's worse. Actual FD return 4.82%, inflation 6%, and the real gain is minus 1.1%. Okay, it means it's losing its value. Now let's see the money after 1 year. So 10% slab rate people with FD amount 1,06,272 rupees will eventually become 1,0270, and for 20% slab rate people, the FD amount of 1,05,544 will become 99,540, and for 30% it's it's going to be 98,820 for the amount 1 lakh 4,860. So as the amount increases, value decreases. We also wanted to touch upon the one of the biggest confusion people have is tax saving FD, that it is fully tax free. No, it is not. So tax saving FD is only eligible for ATC deduction if you opted for a old tax regime, and you can claim it up to 1.5 lakhs. So if you are opting for a new tax regime, there is no benefit for you to have a tax saving FD. And any FD, be it regular, be it tax saving, whatever, it the interest is fully taxed. Okay, and tax and cess applies every year. And of course you are supposed to have this lock-in period for the tax saving FDs, that is 5 years, and you can't withdraw it prematurely. So that is one of the biggest problem with the tax saving FD. One more tedious confusion people have is many times people see that the bank deducts some TDS at the source, and they think that this is the all the amount they were supposed to pay for that FD or be it RD. But that's not correct, because the bank only deducts 10% of the TDS. If you are in 20% tax slab rate, you are still supposed to pay 10% more tax later. And if you are in 30% tax slab rate, you are supposed to pay 20% more tax, because 10% is already deducted at source. And all this surprise is going to come when you are going to file for the ITR. So when FD still makes sense. So if you want to have some emergency fund or short term goals or capital safety, or people who have lower tax slab rates. For them it makes sense because they are going to get what they are seeing. Okay, but it is not meant for long term wealth creation. So with this video we are not trying to tell you don't put your money in FDs. Rather we just wanted to make you aware that there is a difference in what you are going to get as a interest earned and what you are expecting. And after knowing these things you can take a conscious decision that if you want to put your money in FD, go for it. But you, it should not come as a surprise later on to you. So that this video was just to make you aware. Now that's pretty much we wanted to talk about this. But if you like the video, please like it. And if you want to give any feedback, please go ahead and put it in the comments. And we will try to make sure incorporate your feedback. And thank you so much for watching this.